I don't think that this is a situation where the U.S. is having a picnic and the rest of the world is in flames.
Oh, yeah.
It's just, on a relative basis, if you're holding the sword, you typically tend to be the one that's better off.
Yep. No,
yeah, we saw the dollar, get up to the Dixie, get up to like 112, 113, 114, and I mean Europe was on the verge of breaking.
Yeah, that's another chart that I've shared. I put it on Twitter the other day. I put it in our tier 1 note earlier today, which is this dynamic of like everyone's pointing to the Dixie and saying it can't get out of its own way. It's like, guys, wait a second. Like, you understand what happened last year was the euro got killed on a terms of trade deal where they suddenly had to buy our super expensive oil and gas, right? That caused Europe to move into a structural trade deficit as long as oil and gas prices remain that high. They've now unwound that, and now we're looking at the interest rate differential story, unless, of course, the U.S. output in terms of oil and gas continues to depreciate sharply. But I just think that's really hard from here, right? So, like a very temporary relationship kicked in. I put it into a Twitter chart saying, this is a source of so much macro confusion, where the euro, which traditionally trades with oil, right, because it tends to be an anti-dollar trade, suddenly completely reversed. That was just terms of trade, and within FX, it's very rare that major developed market currencies trade on a terms of trade basis because they tend not to move that radically. But this was truly unique.